Welcome to Pressure Points. I'm Gene Munster from Deepwater. Our topic today is Tesla December quarter deliveries. We'll start with a recap of the deliveries, talk a little bit about margin, and then jump into the pressure point, which is expectations for Tesla's market share in 2024. As for the numbers, the delivery numbers, they exceeded expectations. They beat by 1.5%. If you're curious, over the previous 7 quarters, so this doesn't include the just reported December quarter, but takes us back to the beginning of 2022, Tesla has missed consensus estimates by 5 times, by an average of 4.5%. They did exceed one quarter by 5% and came in line with one quarter. Of course, the company doesn't give specific estimates for deliveries. Those are analyst expectations. But in general, over the last couple of years, we've seen slight misses on the delivery numbers, where previous to that, we were seeing beats on those. And so has played into those slowing growth rates have played into pressure on margins. And back in March of 2022, their gross margin ex EV credits was 29%, and that's declined to 16.3% in the September 23 quarter. So that's been a slow, gradual decline. And that's typically what we talk about as the most important point related for Tesla, is that profitability piece. I believe that the numbers that we just saw for the December quarter is going to give some stability to that gross margin number. And specifically, I expect it to be essentially flattish, maybe up slightly, which, even though that's not an impressive gross margin number, 16.5% versus the industry at right around 10% and far from the peak, it is showing the first signs of stability, which I think will be viewed as favorable by investors. And so the general takeaway from the delivery numbers is a little bit better than expected. That should be generally favorable for margin, but I wanted to jump more importantly into the pressure point. In this case, it's related to what's going on with market share. Now, Tesla's EV market share in the U.S. has been declining. Based on Cox Automotive EV market share trends, they estimate that at the end of 2022 it was around 65%, and at the end of the September 23 quarter it was 50%. I've seen other numbers that show them at 70%, going to the high 50s. Either way you look at it, they have been losing share. And I believe they've been losing share for one big reason, is that there was a lot of pent-up demand in 2023 for people who are not Tesla fans, not Tesla loyalists, who love the car that they've had, their Volvo, their BMW, their Ford, and they're waiting for an EV alternative. And when they got that in 2023, they bid and they bit and they bought. And I think that ultimately had this, call it a 2-year pent-up demand, that had a negative impact on Tesla's margins in 2023. Now, the general narrative is that this is the beginning of the end of Tesla's market share dominance, because there's just going to be more and more competition coming on, and that's just going to chip away. I don't believe we're going to see that in 2024. And part of the reason is that if you look at the velocity of new models coming out this year, highly anticipated models, it will be less than what was in 2023. By my estimate, there were 10 key models. Some of those were from Ford and Volvo. Polestar came out, Toyota in 2023. I think in 2024, we may see 5 of those models. And one of the reasons why I'm expecting that slowdown is that these traditional car companies are slowing their pace of investment in EVs. It's something that we've been talking a lot about, and this is the substance of those decisions that were made back in the fourth quarter of 2023. We'll start to see that in the pace of new cars coming out and also the availability. It's one thing to have a car that's out and announced. It's something else to be able to deliver on those vehicles, actually produce them. And I think the combination of that is going to create a lukewarm to down year for these competitors to Tesla. And I think the net of this is that Tesla will essentially maintain their market share in 2024. Now, that's out of consensus. Most people think that it will drift into the low 40s, but I think it's going to kind of maintain in that mid 50% range. That's important because the more you can maintain market share as this market starts to reaccelerate in 2025, the better positioned you are, whether it's Tesla or anybody else, to capitalize on the economies of scale as the demand returns into EVs, which again, I think will be in 2025. So putting it together, I think that the results we saw with the December deliveries were encouraging. That 2024 is going to set up for a year where Tesla is able to maintain their U.S. market share and lay the groundwork for what I think is going to be a strong run for this company throughout the back half of the decade. On behalf of Deepwater, I'm Gene. Bye for now.